I'm Dr. B, and yes, I'm a real ER doctor, so you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse.
Welcome to the Market Pulse. I'm Dr. B here at Verified Investing. Today we're doing a little more housekeeping, talking about order entry, time in force, day orders versus extended trading hours, good till canceled orders. So stick around. This is important to understand before you start trading in the stock market. All right, so today we're talking about time in force, okay? So there's several orders that are very common, okay? You have the day, the EXT or extended trading hours, GTC or good till canceled, as well as EXT AM or just AM, EXT PM or PM. Each brokerage is a little bit different, but in general the same concept applies to all of these types of orders. So this is the Tesla chart, and again, doesn't matter really what company we're looking at here, but I wanted to show you this chart so you understand the difference between the pre-market, the regular trading hours, and then the aftermarket, okay? So this is TradingView. So on TradingView, during the day, from 9:30, okay, from 9:30 right here to 4 p.m., this is regular trading hours. The screen is black, okay? So the market opens right here. Right at 4 p.m., this shade turns blue, okay? At 8 p.m., the chart stops. There's a gap from 8 p.m. to 4 a.m. and then at 4 a.m. you have a kind of a tan colored area start to form here, and that goes until 9:30 until the market opens. So that's the first thing that you should understand. That's how the market works, right? It opens at 9:30, closes at 4 p.m. You can trade most stocks after hours, either in the evening or in the early morning. And so I'm going to show you how to do that with certain orders. So this is actually a kind of a screenshot from my brokerage account. This is Thinkorswim. Was TD Ameritrade, now it's with Charles Schwab. And you can see over here this TIF. This means time in force, right? So you have your quantity of shares, right? Here's the quick buttons you can click. We'll talk about template on another episode, but I keep it on single, okay? And you can see here time in force. And within that, there's a drop down of several different orders. And it's exactly what we talked about on a couple slides before. Day, good till canceled or GTC, EXT, right? You can see all of them right here on the screen. So let's talk about day, right? So your order, if you have an order that's selected as day for time in force, your order is active for that day only from the market open to the market close, 9:30 to 4 p.m. Eastern Standard Time. For EXT, your order again is active for that day only from 7 a.m. to 8 p.m. EST. All right, good till canceled is a way to actually keep your order open for 180 days or about 6 months. All right, and that is active from 9:30 a.m. to 4:30 p.m. Eastern Standard Time. All right, GTC EXT, that again, good for 180 days, but that extends from 7 a.m., all right, the pre-market, all the way through the regular trading hours and all the way to 8 p.m., the end of the aftermarket trading. And then you have a couple other orders, AM or EXT AM. It can be placed from 8:05 p.m. to 9:25 a.m. or overnight, essentially, but that order is only active from 7 a.m. to 9:25 a.m. Eastern Standard Time. So if you place that at 9:26, the order isn't valid, it's not going to work, right? So And then again, PM is essentially kind of the opposite of AM, where it can be placed from 4:05 p.m. to 8 p.m. and that order is active only that day from 4:05 to 8 p.m. Eastern Standard Time. So again, just going back to the charts that I showed you initially here, this is the day time frame, okay? This is the day time frame in the black here, all right, right over here. So now we're going to be talking about EXT AM, and EXT AM is from 7 a.m. again till 9:25, and you can see here 6 a.m., 9 a.m., and you can see about right here is when the EXT AM orders will take effect. And then again, the EXT PM from 4:05 to 8 p.m. You can see that here in the blue. And so first of all, it's important to understand what orders, what time and force to put into your brokerage account in order for the position to get filled. But at the same time, it's also important to remember that during the extended trading hours, there is usually a larger bid, and to ask spread, right? If you remember this from the last episode, this is MSTR, and generally, during the trading day, you'll have a large gap in some stocks, but during the extended hours, you'll have an even larger stock. So you could be, dollars or $10, $20 out of the money on the stock as soon as you click the button. If you get in on, say, a market order, if you buy the ask or bid, depending on what the stock is doing at that time. So very, very important to understand that during this time frame, okay, on most stocks, regular trading hours, you have a lot of volume right here. But if you notice right here, there's barely any volume. And when there's no volume, there's not a lot of buyers and sellers, right? There's not a big market. Well, when there's not a big market for something, the bid and the ask is going to be spread, apart, right? Imagine if you were going to sell baseball cards online and there wasn't a big market for them, how would you know what they're valued at, right? So that's why it's the same concept. That's why there's a large bid-ask spread right in here. So just understand the dynamics, the mechanics of the market. Pull this up on your trading view, look at the volume, look at the different shaded hours, shaded boxes here on the charts. Go to your brokerage account, look at the time in force, GTC, day versus EXT, play around with it. You can even start with one share or do it on a practice trading account so you can start to get familiar with this. This was something that, I'm a finance major and before I went to medical school I studied finance, and they never taught us this, right? They never taught us about these types of orders. You really kind of have to just find this information and seek it out, and that's what we're doing here for you today. And this is really important to being able to trade in the stock market. So hope you enjoyed that. And next time we're going to be talking about one cancels the other order for the template of the brokerage account. So I hope you enjoyed that episode. Again, we talked about time and force. Last time we talked about the difference between limit, stop orders, right? Limit orders, buy market, sell market, and some of the pitfalls you can have with those orders. And then the same thing here, right? So try to put that together with this episode. And then next week, we're going to be talking about a little bit more of a complex order called one cancels the other, or an OCO order. Okay, so we will be talking about that. Stay tuned. And after we've gotten through this housekeeping as I call it, then we can really apply all of the first 5, 6, 7 episodes with these episodes, and then the latter episodes in the next couple weeks and months, we'll start to really dive in exactly how to trade in the stock market. So I hope you enjoyed that. We'll see you next week. Take care.